what's your take on why they decided to push up earnings so early? I mean, is this a positive story that they want to tell fast?
The conventional wisdom, if you look at what's happened in the stock market and also this Morgan Stanley note, is that they pushed it up because they have good news to announce. And the support for that is sort of statements from Elon Musk that came at the end of the quarter, and this sort of general intuition that why would you want to push up bad news? The only thing I'll say, the only caution I'll say, is that it's a little bit dangerous to impute sort of normal business logic to this company or to Elon Musk. He's somebody who has a track record of doing things his own way, and it would not shock me if these guesses turned out to be wrong.
Pierre, you had an interesting research report when you wrote that you expect Tesla to have a major beat in free cash flow. Now, why are you predicting that, and why is the street not catching on to that?
Thanks. Yes, so we already know a lot about Q3 for Tesla. The company has reported how many cars they've produced, how many cars they've been able to deliver to clients, and we know that clients pay cash very rapidly the cars they deliver. So that gives us a lot of information, and I think the one element that the street is probably still missing is the fact that when Tesla sells a new Model 3, they've bought a lot of raw materials that go into the car, but they pay these raw materials only 2 to 3 months later, whereas they sell the car immediately. And when they sell the car immediately, they cash in the full price of the car. So each of these Model 3 that Tesla is selling is actually bringing in the bank the profits booked on the car, of course. And in addition to that, it's bringing in working capital to the tune of $20,000 per car. So $20,000 per car times like nearly 40,000 additional cars the company is producing and delivering this quarter, that's actually $800 million of revenues that the street has largely overlooked.
Max, Citron Research's Andrew Leff took a huge surprise reversal, saying that he's now long on Tesla, and he's been a very vocal short. He said there is no Tesla killer, and that is light years ahead of the competition in his report. What's your take on that?
Yeah, I mean, I think, first of all, a very clever turn of phrase on smoking the auto industry. And I think, the sort of quiet story of this company for the past few months is that while, the CEO was behaving very colorfully and getting in the crosshairs of the SEC, this company was quietly producing tons of cars, doing something, pretty amazing when you just look at the history of the auto industry. The speed of this ramp up in terms of production is pretty unprecedented. And right now, like the Model 3 is outselling most cars in its class. So quietly, Tesla has become this force. Now the big question is, can they make it profitably, and if so, how profitably?
Right, and on that note, Pierre, let's talk about this $45,000 Tesla Model 3. Can Tesla be profitable at that price point, and what are the margins you're expecting?
Yeah, so $45,000 is actually the average selling price I expect for the Model 3 in the long run. So in the long run, like the simplest car with no options will sell for $35,000, and we know like the highest price models go in excess of $70,000. And I think if you compare to what has happened in this industry, like equivalent models at BMW, at Mercedes, I think $45,000 is a good average. So I would expect that car, the build Tesla offered over the weekend at $45,000 to be at that kind of average gross margin the company expects in the long run, which is 25%. Now, of course, this 25% gross margin is still something that you will get once production hell is over, once overcost related to yield, related to quality issues will be off the table. So it's more difficult to know exactly what the profitability of this car will be in the very near term, but fairly rapidly it should head toward 25%, which is the average for the company.
And Pierre, how are you factoring in this recent settlement with the SEC? Is this going to be a significant headwind to the company? There's going to be more oversight on Elon?
That's a very good question, and if you want a honest answer, I see that as a great positive. Elon is an exceptional individual, an exceptional engineer, and an exceptional executive as well, but his personality has its drawbacks, that's the least we can say. And a bit of oversight can only do good. I think controlling his communication on social media will benefit everybody, himself, the company, and myself. It will make my life easier. And more broadly, I believe a lot, in corporate governance, and having a chairman who is not the CEO is something I see as a positive, whatever the company.
And Max, what's the latest that we know about potential candidates for the chairman, independent board directors?
Yeah, I mean, the assumption is that it's going to be somebody who's currently on the board of directors. I think the name people have thrown around is James Murdoch. The main thing I think Tesla and Elon Musk are probably looking for is somebody who's not, literally his brother or his best friend, who are both, on the board, but somebody who he knows, he trusts, but who, can still bring some measure of independence.